What's up, YouTube? So today's video is about the importance of cash days. So pretty much what a cash day is a day where you haven't taken any trades for whatever reason. So you're just cash on the day, meaning you never put your capital to risk or whatever. Um, so yeah, let's just hop into it. Oops. Okay. So a big reason why cash days are important is because as a day trader or a trader in general, what your goal is to be a good good risk manager. So you don't want to be taking bad trades. You want to be taking trades where your risk to reward is high, where you have a high probability setup, where nine times, or not 9 times out of 10, but out of 10 times, or out of 100 times, out of 1,000 times, if you keep taking that setup, you'll be profitable in the long run. So those are the trades where you want to be taking, and not every day of every week you're going to be finding trades like that. So some days, I'd say maybe once or twice a week you'll find an A plus setup where it's like everything is going for it, and then the other days you might be finding A minus setups, B plus, and there might be some days where nothing is clean. So, nothing is even worth you risking money taking that trade. So, think about it like if you have an A plus setup that day and then a C plus setup, you're not going to be looking to take the C plus setup. You're just going to be looking at the A plus. So have that same thought process on days where there's no A plus setups and you just see a C plus. Do you want to take that? Like, is that something you would take if there was also another really good setup that day? And let's say if you go into it with a thought process of, if I'm already green, would I take this trade? So it could be right off open and you're seeing something that's a C plus setup. But if you think about it, like, if I'm already green, would I be taking this? And a lot of times the answer is no. So days like that and trades like that, you either want to be sizing down or just not taking the trade entirely. Just because you want to be sticking to your edge and not whatever's in front of your screen, any setup that you see, any bull flag into a random high of day at a level where it's like super choppy. There's really no clear price action in that level. So another thing with risk management on cash days is there's days where you size down, or trades where you size down, and then there's trades where you completely sit on the sidelines. So you have to consciously do that. You have to think, I have an A plus setup on Tuesday, and then Wednesday comes and you have really nothing. So you can just trade what the best setup is of that day, or you can just completely skip that day, watch price action, get your screen time in, but not take any trades just because nothing is a clean enough setup to where you want to be risking your money on. If you only trade the A plus setups, your probability of success is going to be a lot higher than if you're trading the C grade, the D grade setups just because you want to get more trades in. And last thing, you only want to allocate risk to highly probable setups with good risk to reward. So pretty much the same thing. You don't want to be trading those C, D grade setups just because there's nothing else on the day. This is something I still struggle with. I've definitely gotten a lot better at, but you don't want to be taking a trade just to take a trade. So not every day should you even be taking a trade. If you have cash days, that says a lot about your discipline, and that's going to go a long way as a trader. Longer than just getting more trades in. So someone that might take 10 trades a day is not going to necessarily be as successful as someone who's taking 3 trades a week, for example, because that person taking 3 trades is taking the best setups of the week, versus someone who's taking 10 trades a day is just seeing any setup that he sees and just going overboard with it. So pretty much with what I just said, over trading, when you stick to 1 to 2 trades a day, your entry criteria is very strict. So with that strict entry criteria, which is good, it's good to have that, that's not going to be met every single day. So if you're taking one trade a day, Monday, Tuesday, Wednesday, and Thursday you see no really good setups, don't jump into a trade just because you see like one check off your box when normally you have five checks off your box. You want to stick to that strict entry criteria because in the longevity of things, that's what's going to make you a successful trader. Those days where you're forcing trades, you're probably going to be losing more than you're making, and it's better to just stay cash those days. So another thing, some people feel bored and that if they don't take a trade every single day, then they didn't do well that day. Sitting cash is a lot of times a lot harder than taking a trade, just because it's the psychological game of day trading. Is taking your trades, executing them well, but also skipping out on any trade that doesn't meet your criteria pretty much. So not taking a trade is a lot better sometimes and a lot harder than taking a random trade throughout the day. On slow days, you'd probably be forcing trades rather than having trades come to you. So if you don't see too many setups that you like, you might get some, early entry somewhere, and that might be a bad entry. It might have not even been a good level to be playing. Plus, now you're playing an early entry on it. So yeah, you just want to stick to your levels, stick to your plan for the day, and if you have no good trades planned, or if the way the stock gets to your levels isn't what your plan called for, like let's say it's an overextended move to your level, then just skip the trade. That is going to be better for the long run. You keeping that practice than taking overextended moves or whatever it is. And avoid FOMO. So one, on overextended moves that you don't have planned, but also let's say you're in a trading group like Stock Hours and you see someone in the chat sending 20-30% profits. Don't just jump into a trade because like you feel you're missing out. If you're sticking to your plan, then you're having a good day, even if it means you're not doing anything that day and you see the whole chat making 20% on a trade. If that's not a trade that's part of your plan that you like the setup of, then just skip out on it. See why they liked it, journal about it, see if maybe you should have taken that trade, or if you should have taken it with a smaller size. But still, if not, then you do the right thing, sticking to your plan and not taking pretty much just whatever trade you see someone else taking, or whatever trade is, oh, you see the stock going up, so I'm buying calls. Like, if it's not in your plan, don't trade it. If you don't have a plan for the day, no good trades, then just don't trade for the day. Overall market sentiment is a pretty big thing about cash days. So if you're a breakout trader, and the market is consolidating, so pretty much how we've been the last month, like we just started breaking out recently, but for the last month or month and a half, if you look at the S&P chart, it's pretty much just a flat line. So being a breakout trader, you have to adjust your strategy a little bit, tweak it a little bit. Don't let runners run too long because the market's shown us that it hasn't had the best continuation recently. We just started changing that recently, so things can go back to a breakout strategy, which is good. But yeah, markets are ever changing, and your strategy might not be successful in every market's price action. So what I just said, breakouts versus reversals. I started learning about reversal trades on my own the last like 3 months ish. So on choppy days, I have some information telling me different things I can be looking at on different trades. So I posted a couple SPY reversal trades using Bookmap. Like, that's a whole new thing that I've just recently started this year pretty much. Versus breakout scalps I've been doing for over a year, year and a couple months. So I know much more about breakout scalps than I do in reversals. So I take reversals with lighter size. But since the market has been tailored to a reversal trader, the last like month and a half, 2 months, I've been learning that, trying to see if that can help me, one, in markets like this, but also in the future. And I've learned ways that a reversal could be a it can help me in my breakout scalping. And another thing is learning different strategies, pretty much what I just said, that can help you adapt to new markets. Don't completely change your strategy, but learn how you can tweak it to adjust to the market's changes. So you can add a strategy on top of what you normally do. So for me, I added the reversal trades, rejection trades on top of breakout scalps. So I still do breakout scalps, but I also now started doing reversals and rejection plays. This is huge. Cash is a position. So people think if I took no trades, I took no positions. You took a how do I say it? You made the okay, pretty much what I said. You have to make the conscious effort to skip out on certain trades and remain cash. So you might see setups that are C grade, D grade setups, and you have to make the decision to not trade it. You can watch it, see how it plays out, but you have to make the decision to not trade it. So either your entry criteria isn't met, like it's an overextended move, or there's not enough volume, or futures aren't correlating with the trade. So you skipping out on that trade is you making a decision. That is a position. You're choosing to not take this trade. People think just because you don't hit the buy button and the sell button that you're not really doing anything, but not clicking the button sometimes is harder than clicking the button. So having the discipline to skip out on trades where you know it's not the best setup and you know it's not like your highest grade setup. And going back to what I started with, if you are already green on that day, would you take the trade? Sometimes you wouldn't, just because it's not the best setup. So if you just always keep that mindset and that mentality about trades, you're gonna be in a lot less trades. Plus, also, the trades you are taking are gonna be a lot better setups. So that's gonna increase your profitability significantly. And then also, being break even on a trade is better than taking a red trade if the red trade was not a good setup. So red trades could still be good trades. Like everything could have worked out, could have just not went in your favor, which happens sometimes. That's the risk you're willing to take as a trader. But being break even on a C grade or a D grade setup, or an F grade, but you shouldn't be trading that. But being break even, meaning not taking a trade, is better than taking a bad trade that works out for you. I think that's it though. Yeah, that is it. But yeah, cash is important. It's a good it's really good for your discipline to have cash days, sit out on bad trades, stick to your edge, your entry criteria. Don't take trades, with emotion like FOMO and things like that. Yeah, but in a month you should probably have like a couple cash days. You don't even need to have one, like a cash day like once every week, but there are some weeks where you might have like 2 or 3 cash days because either you're mentally not there ready to trade, or the market isn't just presenting the right opportunities for you. So either size down those weeks or just stay away. It's going to be hard to do, but it is worth doing, and it's going to help you in the long run as a trader. But that's pretty much it for this video. Wanted to keep it pretty short. 14 minutes isn't really that short, but it is what it is. Peace.